Dear finance professionals and students, welcome to podcast of Fca Deepak Rao, a practicing chartered accountant. Daily news and updates for 14th October 2024. The government could soon expand the ambit of its stringent quality norms amid an increase in large-scale dumping of substandard steel, largely from China. It comes after a comprehensive review of local production and imports by the Steel Ministry in early October, which revealed the sector's increased vulnerability to global trade diversions. Stringent quality checks can stem the tide of imports as producers scour for markets amid sluggish demand and steep duties imposed by the US and the EU, which has increased risk of dumping into India. At present, import of multiple grades of steel is permitted despite quality control orders on the basis of a no-objection certificate from the Steel Ministry. Reliance Industries is negotiating to acquire a stake in Karan Johar's Dharma Productions. This deal could enhance Reliance's foothold in India's content production industry. Dharma Productions is exploring strategic partnerships due to rising production costs and shifting consumer preferences towards OTT platforms. Reliance Industry Limited's acquisition would bolster its existing portfolio, including Jio Studios and Viacom 18 Studios. In a significant move to tighten GST compliance and prevent revenue leakage, the Central Board of Indirect Taxes and Customs has issued notification number 9/2024 Central Tax dated October 8, 2024. This notification mandates that the service of renting commercial properties by unregistered persons to registered persons will now fall under the reverse charge mechanism. The new provisions will come into effect from October 10, 2024. Fundraising via qualified institutional placements or QIPs has hit a record high this year, with favorable valuations and liquidity support prompting big-ticket launches by large corporates. QIP is a fundraising mechanism where a company issues new shares to a select group of investors at a discount to the prevailing market rate. It is a preferred mode for raising follow-up fresh capital in a bull market, as it is time efficient and inexpensive. So far this year, 71 firms have raised Rs 88,678 crore through this route, the highest in a calendar year. The centre's direct tax collections after refunds stood at Rs 11.26 trillion in April 1st to October 10th, accounting for 51% of the full year's target, official data released on Friday showed. The collections so far are up 18.4% on year, which is higher than the full year's growth projection of 12.8%. If sustained, the actual mop-up could surpass the budget estimate of Rs 22.07 trillion by a decent margin. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.